Could Bitcoin hit 30K this week? In this video, we're going to be jumping down into some of the on-chain data, into the macro views for Bitcoin, taking a look and giving our thoughts and opinions on what the data might mean. As I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into this one though, and jump into some on-chain data. Okay, so let's start things off by taking a look at what has been going on with the on-chain data over the weekend and what's being set up for this week. Okay, so we can see up here we have these three numbers. At the top right-hand corner, we have 2.3809 million Bitcoin going onto the exchanges since the 1st of January 2023. We can see that we've had 2.3321 million Bitcoin coming off the exchanges since the 1st of January. This means that there's now 48.8 thousand more Bitcoin on the exchanges than there were at the end of 2022. Okay, now this is important because this basically is an indication as to how bullish or how bearish we should potentially be here for BTC. Okay, basically, if there's a lot more supply going onto exchanges, there's a lot more supply being made available to be sold. And therefore, that would be bearish because essentially there is more supply than there is potentially demand. If there was more demand than there was supply, we'd see that there was a lot more Bitcoin leaving the exchanges. People are taking it away from the exchanges and not trying to sell it. Okay, so then we take a look at these things. It's important that we see that we've been growing the amount of Bitcoin steadily, day on day, over the last little while here with the amount on the exchanges. So when we can see here on these line graphs, we see an uptick here with Bitcoin flowing to the exchanges. We can also see up here on the 30-day average bars more Bitcoin going to the exchanges. This is unfortunately a bearish situation where we're starting to see that the table is tipping more in favor of the bears right now. Okay, yes, price continues to move upwards, but it doesn't appear to be overly natural in the way that it is going. If we were to really consider the fact that there is more Bitcoin being made available to be sold, and supply and demand metrics would indicate that actually we should be thinking about moves to the downside, not to the upside. So we know that there's actually something irregular about what is going on with this regular push or irregular push to the upside. I think there's some manipulation occurring, and we do see a lot of gaps, imbalances in the order books as well, that seems to be driving it. So again, we can read into all of that as we will. Let's move on though, so we want to get into some of the other stuff as well. So here we have a line graph. We can see that over the weekend, more in the way of inflows than we have outflows, so a lot more people loading up the exchanges ahead of this week by the looks of it. And as we kind of get into the wallet counts, this is where things start to really get interesting. Okay, so Bitcoin Dust, basically a wallet that has over 0.01 BTC in it. Okay, so we call it Dust because you should be able to acquire, in my opinion, 0.01 BTC if it is a meaningful amount to you. Of course, you can find that there's an increase in wallets that are lower than this, but is it really meaningful? It doesn't make a huge dent to the supply of BTC, for example. In the same way that the Bitcoin halving event has very little to do with supply and demand metrics now, unlike what it used to do way back in the day. Good example of this is that for halving the rewards right now isn't really going to be impacting the supply too much. Whereas a decade ago, when you halved the Bitcoin mining supply or mining rewards, essentially it had a bigger impact. There wasn't much Bitcoin out in circulation at the time. Now we've got over 19 million Bitcoin. It really makes minor differences whether or not you have a halving event. At least that's my opinion on it. It would make logical sense that it has very little impact now. But again, there are people who love a halving event. So let's move on. As we get into the retail-sized wallets. Here we have Krill on the right-hand side. This is over 0.1 Bitcoin per wallet. And over in the middle here, we've got the Shrimps, which is over 1 Bitcoin per wallet, and Dolphins over 10 Bitcoin per wallet. So the black lines are the wallet counts. We can see that all of these were subject to selling, so they took some profits, and price continued to move to the upside. Now, this is pretty common for a retail investor. For example, they sell here at $22,000 Bitcoin, taking their profits. And then you start seeing them buying up right up here at $24,000, right? They sell low, buy high. And the retail investors do this all the time. And so it's not unusual that we see over here, the Dolphins were selling at 24, and now they're buying again at 27, right? They're not doing it right. You're supposed to buy low and sell high, but this is a typical retail thing. They fear that they're missing out on something, right? They shouldn't have sold. Oh dear, it's going to the moon. $1 million in 90 days. All that kind of BS that you hear, clickbaity nonsense and whatnot. But essentially what you see is a retail investor, and all of these, even though they're different sized wallets, act in a very similar way, which is why I group them together like this. It allows us to kind of dissect down how many wallets are in each of these buckets, but also allows us to understand the emotional responses that they have to price action. And of course, whilst we see these guys selling, what do you see? You see the institutional grade investors buying. And we see a bump now with the Bitcoin whales. They've jumped up a pretty significant amount as we've seen some retail selling occurring. We now see these at 2022 from the low down here at 2002. So we've basically got 20 more wallets with over 1,000 Bitcoin in them. But we can also see that there's a jump in the number of Kraken sized wallets. This is 10,000 Bitcoin or more, and it's up there at 118 wallets now. Okay, now this is really interesting to me because it means that we've seen enough kind of aggregation of smaller wallets into these larger size wallets. Accumulation had occurred within these wallets, but as I said earlier, I don't think it's natural. In the way that we've seen Bitcoin's price moving, and we've got left behind a lot of these imbalances in the order books, I don't think it's a coincidence that we can see that these particular wallets are increasing. I think these ones are the ones that are driving this to the upside. And unfortunately, as the whales love to do, once they get a significant amount of FOMO, and once the price is driven to a certain level, they will be probably looking to liquidate those positions, drag out as much of that retail liquidity as possible, and bring in some fresh, interesting levels for BTC's price. So it's going to be interesting to kind of see. I'm expecting something big this week, and I think a lot of stuff is being priced in, and I think a lot of retail are going to be on the wrong side of this. So it's one of those interesting stuff. We're starting to see what needs to happen here in the sense of retail needs to sell their Bitcoin to the institutional level investors. We can see that occurring now, but we haven't yet done what we did back in 2018, which was this. And this is the Kraken size wallet. And you can see that there's an accumulation as retail starts to sell, they start to move upwards, right? And then you can see here, they flood the market with Bitcoin, bringing that price down because the imbalance between supply and demand is really important. And when there's so much more supply of Bitcoin, price will go down. And of course, there's accumulation afterwards. And, you know, we've looked at the whales a dozen times before. We can see that they only accumulate when retail is selling over here as well. You can see retail coming out. You see whales coming in, and then you see Kraken dumping on the market, bringing in those fresh lows. And I'd say they're not necessarily selling their Bitcoin. What they're doing is they're making it available to be sold and creating fear, doubt, and uncertainty in the space, and essentially bringing that price of Bitcoin down by making so much more supply available to the market. Not to say that it's actually sold or anything like that, just imagine that this is going to be a significant, quick drop to the downside. Now you can see here that they really just brought in the final lows. They didn't bring in the actual lows. I think retail really started that part over that side. So they really only started when Bitcoin was about $4,200, and they brought it down to about $3,200. It was a pretty quick move from the 1st of December, so about 2 weeks. Took about 2 weeks to do that. So it's not overly that impressive in terms of time. You've got a very small window if you're trying to catch a bottom. Ultimately, that's not really what we're looking for. We don't need to get a bottom. All we need to do is get confirmation that things are logically moving in the right direction, i.e., are whales actually participating, or is it all just driven from retail? For example, we are potentially up in this kind of area here from 2018, right? Where retail's come in, bottom is in because they've been told that bottom is in for the third time. Bottom is definitely in. It's not until much later where they start selling because they believe that they've been lied to, and the bottom finally comes in. And it's only when they are selling that whale investors here are able to actually participate. So where are we right now? Well, we're in a situation like this where investors have been coming out, but there's now an interesting spike here. Could be the change that we're looking for. And retail investors are starting to kind of waver up here. They've been going flat. Are we waiting for these guys to finally move down after buying every dip that every Moonboy influencer was telling them to buy? Essentially, we're getting somewhere. The Kraken size wallet's been accumulating. Are they getting ready to gear up for a bit of a drop to the downside as well? Like I said, I think a couple of days ago, biggest bull trap in Bitcoin history? Possibly. Let me know your thoughts in the comments below. Let's jump into some charts, right? So we had the weekly close position yesterday. We closed inside the Gaussian channel, bullish, right? So on the weekly time frame here, closing inside the Gaussian channel historically has meant that we are done with the bear market lows, right, which would be fantastic. However, I don't think that is what's going to occur here. There's too much manipulation going on, and look at these fair value gaps that have been left behind. We now have two. To put that into context, let me zoom out. There are no other fair value gaps on this weekly chart. In fact, I can come over to Bitstamp and check this one out. It's got more data. The only one that's been left behind is this one over here, and it was when Bitcoin was back in 2013, and it was $133, right? It's the only one that's ever been left behind, and you can speculate maybe we'll come back down there and refill those at some point in the future. I just think it was too new, too scarce at that particular time to stay at those low levels, and that one just never got filled. We did come back down into it, but we just never actually filled it out completely. So up here where we've got these two left behind, right, we have to start considering, do we actually have to go back and fill these? Let me show you a couple of other clear examples in Bitcoin's history. Okay, so over this side here, we did something very similar, right? We had this move, we grabbed that, right, left this gap behind. Okay, on the way up here, we left this little tiny gap right here behind, and that was pretty much it, right? We had these two on the weekly chart. And what did we do? It took a pandemic, but we did come back down and fill those gaps out, right? I'm just saying that these things have a way of kind of getting backfilled. We can also see that there were several up here as well. Let me actually go ahead and bring these ones into play. So we can see right inside here, there was one there. We could also see one right in here. Right, and we can see that it took a while, but they came back down and filled these gaps, right? We can see them getting filled out. So my point is that although we can see that there's a couple of gaps here, and I know retail investors are going to love to say, look, we've closed inside this Gaussian channel, we're going to the moon, $1 million in 90 days. However, we should also reflect on the fact that historically speaking, because everyone loves a little bit of Bitcoin history repeating itself, these gaps have been filled. But also above and beyond that, Smart Money Concepts tells us that price likes to come back down and fill these gaps. They're called a fair value gap. They're an imbalance in the order book, and essentially it's irregular the way that they've been stacking up the way they are. Ultimately, I think rejection is likely to happen, but I don't think it's going to happen until we hit 30K. So I expect to move upwards before we move down, but a downward move I think is something that we are and should be expecting to occur here for BTC. If we take a look at this, right, from an Elliott Wave theory point of view, it's still possible that we have this Z wave, but the targets for the Z wave have now changed. And we are looking for 32,917 to put an end to the Z wave structure. But it doesn't necessarily mean that we're done with the lows. If I take a look at it from this point of view and we were to rally up into those kind of 32K ranges, then we could still potentially be looking at this as a giant corrective structure, and that would potentially be worse than having the Z wave. So in an ideal world, what we actually want is the Z wave, because the Z wave is more predictable. It gives us some areas where we can be focusing on accumulation and allows us to kind of have a nice, healthy correction. However, if you do an ABC or WXY structure, basically you're potentially talking about coming down into the significant lows, and you're probably talking about losing the $10,000 level altogether and going significantly lower. So it's one of those, you're robbing Peter to pay Paul. We're moving up now, sure, but it's a short-term pump to the upside that's going to get everyone trapped out and feeling a little bit giddy with themselves, only to realize that actually things are going to get a lot worse, and it's going to be sustainably worse for a period of time. It's not something that's going to be an easy fix, which is why all eyes are on the Fed and what the Fed are going to do on Wednesday. Because the right thing to do would be to hold strong, to do a 0.5 interest rate hike, and get rid of this inflation that's causing so many problems, right? Yes, there's going to be a knock-on effect to that. People will lose their jobs. Businesses will go bankrupt. Banks will go bust, for example, right? These are unfortunate casualties of the war against inflation. So that's what I think they should do. They should stick to their guns, and they should do this. They should do a 0.5 interest rate hike. However, because they bottled it the last time, and they really did bottle it. They did a 0.25 when they should have done a 0.5. I think they might do a 0.25 again and test the water. But essentially, I don't think that's a good idea either, and I think it's going to encourage also a lot of bad behavior. Ultimately, I think that we are going to see some interesting things from the Fed. I'm not sure how they're going to swing it, but I personally think they need to do a 0.5 if they want to save everything that is going on in the US. Without it, then you do have those real possibilities that not only do you end up with inflation going rampant again, you'll end up with basically just devaluing the dollar, hyperinflation. Hyperinflation leads to overpriced assets in Bitcoin. So you take that $1 million Bitcoin in 90-day example, right? People are betting that hyperinflation is going to kick in, and hyperinflation takes Bitcoin to $1 million. Who's going to want the dollar at that point? You completely devalue the dollar. There's nobody's going to want to take that trade. So you're not going to be trading in dollars for your Bitcoin. Bitcoin still has its intrinsic value. That hasn't changed. The only thing that's changed is the value of the dollar. So don't get yourself tripped out thinking that, you're going to be getting $1 million for your Bitcoin, because you're not going to want the $1 million, because it's going to be worth just let's say 20,000 pounds sterling, right, for your $1 million. It's not worth the $1 million that it is today because of the hyperinflation, right? So let's not trip ourselves out thinking, oh wow, $1 million Bitcoin, we're going to be millionaires, right? You can be a millionaire in some other countries around the world. Doesn't make you a millionaire in the United Kingdom or in Europe, for example, right? So we don't want hyperinflation in the US necessarily. We do have to consider what it would mean to the price action, and really, are you going to want to hold dollars? Probably not, and therefore you get into a really bad situation overall. And it means that we're going to have to potentially look for new pairs outside of USDT or USD and any other kind of USD based stablecoin or anything like that. We'd have to start using maybe GBP, maybe Euro, maybe Japanese yen. Who knows, right? There's lots of different pairs out there that you can analyze things on, but if USD continues to go the way that it's going, it's not going to be a useful pair. We're not going to want to trade USD for Bitcoin or anything like that. We're going to want to kind of look at that slightly differently. But let me know what your thoughts and opinions are down in the comments below. Do you think that we are going to the moon? Do you think that ultimately the USD is going to be so worthless you're not even going to want to transact on it? Let me know. I'm really interested to get your thoughts and opinions. Let me know also what you think the Fed are going to do. Nothing? Pivot? 0.25, 0.5, hey, go completely bonkers or go for a 1.75, who knows? Let me know your thoughts in the comments down below. Until the next one though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.